Everyone hates HIMS right now. That's exactly why it might be the biggest opportunity in the market. HIMS is down more than 50% from its hikes, yet the business is stronger than it's ever been. Let me show you why. Let's start with the facts. Despite being down over 50% from the February hikes, the business hasn't deteriorated. It has improved. Q3 was the strongest revenue quarter in the company's history. Revenues were up roughly 50% year over year. In just the last few months, HIMS launched the HIT treatment. They launched labs, they started international expansion, first in Europe with the acquisition of Zava. And just a few days ago, the 2024 numbers for Zava were released, showing revenue growth from $25 million in 2023 to $50 million in 2024, proving that demand for personalized healthcare is universal. Then, just a few weeks ago, HIMS expanded into Canada with the acquisition of Livewell. So, let me ask you this. If back in February I had told you that you will be able to buy HIMS at $30 after record revenues, new verticals, and international expansion with roughly $600 million in quarterly revenue, no one would have believed it. And yet, here we are. Now that the opportunity actually exists, almost no one wants to buy. Why? Because sentiment is terrible. And this situation reminds me a lot of what happened with AMD at the beginning of 2025. At one point, after Liberation Day, AMD was trading about 67% below its highs. People were calling it Advanced Money Destroyer, a fake competitor to Nvidia, completely written off. All of this while fundamentals were still improving and data center revenues kept growing. Then, suddenly, AMD took off. The stock was up over 250% in just 6 months. And interestingly, once AMD started running, the negative comments disappeared. Why? Because sentiment doesn't lead price. Sentiment follows price. But if you want to make money in the stock market, you can't base your decision on sentiment. You have to base them on fundamentals. This is why negative sentiment, not only for HIMS but for any stock you strongly believe in, is often good news. It means a large part of the risk is already priced in. Buying when sentiment is negative reduces downside risk and significantly increase upside potential. That's a win-win. Just like buying AMD in the 70s or 80s turned out to be a great deal, I believe buying HIMS in the low 30s will also prove to be a great deal. Now, let's address one of the most common criticisms I see. I read many comments saying people who are bullish on HIMS are just looking at the past. They see the insane revenue growth, 17%, sometimes even 100% year over year, and they assume it will continue, but growth is slowing. Here's the reality. The slowdown in revenue growth and subscriber growth is mainly due to a decline in the core sexual health business, and that decline is intentional. Management has explained multiple times during earnings call that the decline in on-demand sexual health subscribers is the result of a deliberate strategy. They are pushing customers toward daily sexual health offerings, because daily offerings generate higher revenue and significantly better retention. This is management choosing to think in years, not quarters. And that brings me to the second point, and this is crucial. Winners tend to repeat themselves. Many people believe the success of great CEOs and great companies is just luck. It's not. Success is a reflection of management culture, and culture doesn't change overnight. There is this idea that when a business starts slowing down, it's destined to die. That's simply not true. Strong management teams adapt. They find solutions. When they see the ship heading toward an iceberg, they don't let it crash. They change course. One of the best examples of this is Netflix. In 2022, Netflix lost around 80% of its market value. Subscriber growth stalled for a couple of quarters and even slightly declined. The market reaction was brutal. Netflix is done, it's going out of business, but management didn't panic. They introduced new subscription tiers. They launched advertising as a new revenue stream. They experimented with new formats. And what happened? Subscriber growth returned. Earnings exploded. The company came back stronger than ever. This is why it's so important to understand that great companies can respond to changing market conditions. And the fact that a company has already succeeded in the past is not a weakness. It's one of the strongest indicators of its ability to win again. That's exactly why I remain bullish on HIMS at these levels, and why I think that buying HIMS in the low 30s is an opportunity that's simply too big to ignore.